$32 billion. I don't care how good Wiz is, Google just paid the ultimate FOMO premium.
FOMO? Nate, they bought the absolute crown jewel of cloud security. It's a strategic necessity, not a panic buy.
I look at the multiple, Maya. It's astronomical. Even for Google, $32 billion is heavy couch change.
Maybe, but if you think that price tag is wild, wait until you hear about Netflix quietly buying Ben Affleck's AI startup.
Oh, we are definitely getting into that. The rundown. $5.5 billion for work shirts. I mean, Cinta's buying UniFirst is basically a play for the industrial laundry monopoly.
Monopoly is a very strong word, Nate. The uniform rental market is incredibly fragmented. They're just buying market share because organic growth in car keys is totally flat. If you actually look at the regional overlap, it's not a monopoly.
I'm just saying, if I'm a local auto mechanic, my choices for branded coveralls just got cut in half. But fine, let's talk about a market that actually is consolidating. Hapag-Lloyd is grabbing Israeli shipping giant Zim for $4.2 billion.
Taking them private too, pulling Zim right off the New York Stock Exchange. I read the early filings on this one. Hapag-Lloyd is paying a massive premium, but with global supply chains stabilizing, they absolutely need the ocean freight scale.
It fits the broader pattern we're seeing. Global M&A volume is steadily rebounding. Rates are stabilizing, inflation is chilling out, and private equity is sitting on a record mountain of dry powder. They have to spend it. Speaking of PE, Apollo is dropping $3.7 billion on Nippon Sheet Glass.
Their biggest Japanese private equity venture ever, which makes total sense. The yen is weak, and Apollo loves a heavy industrial asset. But Nippon Sheet Glass? That's a tough business right now with global energy transition costs. They're going to need a lot of capital expenditure.
You just have to look through the cracks, Maya.
Wow, did you write that glass pun down beforehand?
I spent 10 minutes on it this morning. But look, the real wild stuff is in the Whisper network today. Blackstone is apparently looking at buying a surprise stake in the Global Cricket League.
Wait, really? Blackstone is doing cricket now?
The margins on international sports broadcasting are wild. But that's not even the weirdest crossover. Netflix quietly bought an AI filmmaking startup called Interpositive.
Okay, tech companies buy AI startups every Tuesday to avoid building things themselves. Why is that weird?
Because it was founded by Ben Affleck.
Oh, come on. Batman is coding generative AI now.
Hey, industry experts say generative AI is the primary catalyst for deal making right now. Netflix is probably just trying to optimize their Boston accent algorithm.
I need to see the cap table on that immediately. I bet the footnotes are hilarious. But speaking of AI consolidation, we should probably talk about a cloud deal that actually matters. Google just officially closed the biggest tech acquisition of the year.
$32 billion for Wiz. And they actually navigated the regulatory hurdles to integrate it into Google Cloud. We need to tear this term sheet apart. The big one, $32 billion. I still cannot wrap my head around that number for a company that is, 4 years old?
4 years old, and they just pulled off the biggest tech exit of the year. Google officially closed the Wiz deal this morning.
It is a staggering amount of money. But honestly, Google Cloud had a gun to its head. They are sitting in third place behind AWS and Azure. They needed a crown jewel in cloud security.
A $32 billion crown jewel? I read the footnotes on the closing documents, Nate. The revenue multiple is completely detached from reality. They paid something like 60 times annual recurring revenue.
You are looking at this like a spreadsheet jockey?
I am looking at it like someone who respects basic math.
Math doesn't win cloud wars. Narrative does. When I was banking, we saw this all the time. Enterprise CIOs want a one-stop shop. Google buying Wiz is them walking into the room and slamming a massive $32 billion fist on the table saying, "We take enterprise security seriously."
Or it's them walking into the room smelling like desperation.
Oh, come on.
I mean it. I respect Wiz. It is a phenomenal product and a brilliant New York startup success story. But the real story here isn't even the price tag. It's the fact that this actually cleared the regulatory hurdles. How did Google slip a massive cybersecurity consolidation past the regulators?
That is the magic question. I genuinely think the FTC is just spread too thin. They are fighting so many antitrust battles across so many fronts right now. Google essentially found a window where the bouncer was distracted and slipped right into the VIP section.
I don't think the bouncer was distracted at all. I think Google structured this brilliantly. If you look at the actual product overlap, it is incredibly small. Wiz is pure cloud-native security. Google's existing suite is much more focused on legacy endpoints. They could argue to regulators with a totally straight face that this is an expansion of capabilities, not the elimination of a direct competitor.
That's actually smart.
It's bulletproof.
And it fits perfectly into the broader macro picture we're seeing. Every industry expert is pointing to generative AI and cloud infrastructure as the primary catalyst driving this current surge in mid to large cap deal making. Google is basically buying the ultimate security moat for its AI enterprise push.
Which just sets a terrifying new floor for the next startup. If I am a cybersecurity or AI founder today, my valuation expectation just doubled overnight.
Exactly. The private equity guys sitting on that record amount of dry powder are going to have a very hard time swallowing these new tech valuations.
Speaking of swallowing huge valuations, tech isn't the only sector seeing massive consolidation today. Hapag-Lloyd is taking Zim private for $4.2 billion, and we really need to talk about what that means for the global shipping market. Voices. I'm reading this morning's analyst notes, and it's just textbook wishful thinking. They're claiming global M&A is steadily rebounding purely because of stable interest rates and a record amount of private equity dry powder.
They aren't entirely wrong, though. Look at the board today. You've got Apollo dropping $3.7 billion on Nippon Sheet Glass. That's Apollo's biggest ever Japanese private equity buyout. Pure dry powder deployment right there.
Sure, Apollo's doing Apollo things, but the analysts are also trying to tie this whole deal-making surge to generative AI and the energy transition. They're forcing a sexy narrative onto a market that's actually pretty boring.
Boring? Maya, Google just officially closed the Wiz deal. $32 billion. They actually navigated the regulatory maze. That's a massive tech consolidation.
Wiz is cloud security. It's a real business with real enterprise revenue. It's not some generative AI hype machine.
Okay, but AI is absolutely driving the broader crossover deals. Did you see the Netflix whisper on the street today?
Don't tell me they bought a theater chain.
Better. They quietly snapped up Interpositive. It's an AI filmmaking startup founded by Ben Affleck.
You're joking. Ben Affleck has an AI startup.
Had. Netflix owns it now. See? The analysts are right. Gen AI is the catalyst.
Oh, please. Netflix buying a celebrity side project is a rounding error. It's not moving the global M&A needle. The real volume is in traditional consolidation. Cintas is buying UniFirst for $5.5 billion. Uniform rentals, Nate. Not artificial intelligence. Just trucks delivering clean shirts. Or Hapag-Lloyd taking Zim private for $4.2 billion. Shipping containers.
Fair. Shipping containers and shirts are paying the bankers bonuses right now. But don't ignore the PE dry powder thesis just because you hate the AI hype. Blackstone is literally evaluating a surprise stake in the global cricket league.
Cricket? As in the sport with the paddles?
They're called bats, Maya. And yes, they have so much cash they're looking at wickets. The macro guys are right. The money has to go somewhere.
I'll believe the cricket deal when I read the footnotes on the term sheet. But speaking of money needing a home, we should look at what large cap pharma is hunting for tomorrow. Spill the tea.
Okay, I need you to explain this to me like I'm a former banker who only watches baseball. Blackstone buying into the global cricket league?
I knew you were going to obsess over this.
It's brilliant. Live sports are the last moat in media. Private equity has been circling European soccer for years, but cricket has 1 billion fans in India alone. The math works.
Does it? I looked at the broadcast rights structures. They're incredibly fragmented. You aren't buying an NFL team here, Nate. You're buying a highly complicated asset with massive currency risk.
You just hate fun.
I hate messy cap tables. But speaking of messy, did you see what Netflix quietly slipped through this week?
Don't tell me they're raising prices again.
No, an acquisition. They scooped up Interpositive.
Wait, Ben Affleck's AI filmmaking startup, Netflix bought that?
Exactly. No press release, no big splashy announcement, just quietly absorbing an AI company founded by Batman.
That's actually wild. I mean, Affleck is a smart guy, but this feels like Netflix just buying a shiny Hollywood toy to keep talent happy.
See, I disagree. I don't think this is a vanity play at all. Look at the generative AI deals right now. Tech giants are terrified of missing the boat. Netflix is buying the IP before the valuation gets completely detached from reality.
I guess that makes sense. Same reason we're hearing whispers about Gilead dropping $2 billion for Uro medicines.
Right, the autoimmune play.
Exactly. Big Pharma is hunting for mid-sized targets to plug the holes in their pipelines before those valuations also go to the moon. Buy the target now before it costs $32 billion.
Which is exactly what we need to talk about next. Google finally closed the Wiz deal, and we need to look at the actual numbers they filed this morning. Tomorrow's radar. I am refreshing the SEC feed tomorrow morning for Gilead Sciences.
The Uro medicines rumor. $2 billion for an autoimmune pipeline.
Right, but I don't buy that valuation. Arrow's phase 2 data was muddy at best. $2 billion feels like pure desperation from Gilead.
Disagree completely. It's a classic land grab. Big Pharma has massive pipeline gaps right now. If Gilead doesn't pay $2 billion today, private equity pays $3 billion tomorrow.
Private equity is not touching that clinical risk. Oh, come on.
They will just to deploy their record dry powder. Speaking of wild valuations, did you catch the Netflix whisper?
Interpositive, the AI filmmaking startup.
Founded by Ben Affleck, Netflix quietly scooped them up.
Calling it an AI startup is so generous. I looked at it, it's basically a script formatting tool wrapped in a generative AI buzzword to bump the premium.
But Affleck, it's Hollywood corporate theater at its absolute finest. Almost as good as Blackstone evaluating a stake in the Global Cricket League.
Don't even get me started on the cricket pitch deck. We are saving that disaster for Thursday.